So Russia needs something else in order to do trade, to conduct sales and purchases of international goods, gold being one way of settling, a settlement mechanism ultimately. The interesting question is going to be whether if those Trump tariffs apply, whether the divergence sticks. So whether the tariff really does cause a split in the gold price between America and the rest of the world or not, because America does have lots of gold production, right? The Australian dollar is very low right now. So if it rises, this undermines the value of gold for Australian investors. So if the gold price goes up 20% in the next year, but the Australian dollar goes up 25%, you lose money.
While the headlines scream about stocks tanking, something pretty extraordinary is happening that many investors are either completely missing or just don't seem to understand. Now, gold, it's all about gold. Gold should be falling alongside everything else. That's the historical pattern. But instead, it's hitting all-time highs and continues to do so. Now, my guest today, Nick Hubble's latest piece, or actually, no, not his latest piece. This was last week's, but it was so interesting, I thought we should talk about it today. It digs into his market and not this market anomaly and the potential explanations of eye-opening. So what makes it so that it breaks one of the most reliable rules of market sell-offs? Now, as the Bank of Montreal recently pointed out, gold almost always gets sold to fund margin calls when the markets crash, but not this time. So something fundamental seems to have changed in how traders view gold, and understanding why could be crucial for positioning your portfolio. That's what Nick reckons. So Nick, welcome, buddy. Glad to see that you're wearing the same colour as me.
Yeah, we're both equally fashionable.
Yes, exactly. And I'm losing my hair too. Not saying that you're losing yours as well, but actually, no, you are receding a little bit. But I won't go into that rabbit hole. But look, Nick, let's start with the divergence that you've highlighted. Gold and stocks have been moving in pretty significant lockstep for years, but suddenly they're heading in the opposite direction. What's going on?
Yeah, it's a bit of a mystery. So this piece argues that there's all these unusual things that are happening, which has broken this correlation that stood for so long between stocks and gold, where each time stocks fall rapidly, we're talking about fast drops as we've seen over the last few weeks in the US, gold initially sells off. And this has been a really important pattern for us in our career, Woody, for both of us, because we've recommended gold as a crisis hedge. And what always happens is it goes down when stocks fall, and then we have to trot out our explanations. So we're very well versed in reassuring people that this is just a knee-jerk reaction. Gold just always sells off initially with stock market crashes, but then over time it's going to outperform. And so something's changed. We haven't had this short-term knee-jerk reaction. What is it? There's a couple of possible arguments. There's the geopolitical one, for a start, which is the idea that gold has taken on a role as an international currency now that the Americans and Europeans, I should say as well, actually, have cracked down on Russia and have placed these sanctions on Russia using the international currency system. So Russia needs something else in order to do trade, to conduct sales and purchases of international goods, gold being one way of settling, a settlement mechanism ultimately. So this increases the value of gold to governments and central banks around the world, so they buy more of it. Another example is that the idea of an asymmetric trade developing. So this comes from Jim Rickards. Central banks, as well as governments, diversifying their reserves into gold out of foreign currencies, because now it's an open secret that governments can crack down on each other's reserves. They can decide to confiscate each other's reserves, so you might as well have more gold and less reserves that are subject to this political risk. And so central banks are selling currencies, buying gold. This places a sort of a floor underneath the price of gold, where every time the price goes down, all these central banks sort of pop out of the woodwork and start buying, and obviously because they're central banks, it's vast amounts. And what traders are doing there, they're saying, well, if I try and sell gold, that's pretty risky now because the price can only go down so far before all these central bankers emerged as big buyers. So it's a pretty risky trade to be short gold. And that becomes a self-fulfilling prophecy where, without sellers risking a short position, the longs have the dominance, and so the price goes up over time. And there's a couple of other reasons that I go to in this piece. We can dig into a few more. But the point being that the sort of rules governing the gold trade have fundamentally changed. And that's why the
Yeah.
gold price is now going up, despite the fact that stocks are crashing.
So there's like you say, you explore a number of explanations. Is it a combination of all these things, or is there one that's driving this unusual behavior more than another?
We don't know. We just don't know which one's the crucial one. The data doesn't particularly identify or point its finger to any particular issue. Otherwise, it would have written that article just about the one. We don't even know to which extent these various different options are true. Right? So, I mean, obviously, central banks are buying lots of gold. There's this geopolitical risk. All that's true. But we don't know whether the gold price is moving specifically because of that. Surely this force that used to exist of traders selling gold in order to raise cash for margin calls on their other positions, that hasn't gotten away. That incentive hasn't gone away. It's just that maybe they're selling something else in order to raise that cash instead, because gold is in such a heavy uptrend. We don't know which one of the arguments it is, but the point is that the rules have changed. And so now investors have sort of got the opportunity to join this asymmetric trade.
Yeah, I want to come back to that asymmetric trade a bit towards the end, because I think that really speaks to where the opportunity is for Aussie investors on the ground and trying to figure all this stuff out. But look, you touch on Trump's potential tariffs splitting the global gold market. Can you elaborate on how this might create different gold prices in different regions and what implications that has for investors first?
Yeah, so if a trader wants to move their gold from somewhere in Europe to somewhere in America and there's a tariff on it, that effectively creates two different gold prices around the world, a higher one, whatever percentage the tariff is in the US. And so this divergence, this risk of a divergence, that has already opened up a price differential. And so people are able to buy gold in Europe and sell it at a higher price in the US already in anticipation of the fact that these tariffs might apply. The fact that vast amounts of gold are being used to speculate on this price difference has sucked a lot of physical gold out of the market. So that's added another incentive for the price to go up as well. So that is a shorter term force on the gold price, which may also explain why nobody's willing to sell gold as part of the margin call for other positions in the short term, because there's this mad dash to try and preempt the potential for Trump's tariffs. And we're seeing it in several other commodities as well. The interesting question is going to be whether if those Trump tariffs apply, whether the divergence sticks. So whether the tariff really does cause a split in the gold price between America and the rest of the world or not, because America does have lots of gold production, right? And so part of the story there is that Trump has been talking about the gold standard and is the gold in Fort Knox and all this sort of thing. And the inference is that America itself might increasingly diversify into gold. One of the interesting questions at the moment is we've had the Europeans and Americans apply sanctions on Russian assets. What happens if it goes reverse? How does that change American incentives? So if you get this split between the BRICS and the rest of the world, then suddenly gold becomes one of the few settlement mechanisms that can't be interfered with politically, or it's difficult to at least. So that creates so all of these things sort of feed off each other and ratchet up off each other. I think that's why the gold price has managed to withstand the sell-off in the stock market. And I don't think many of those forces are likely to unwind very quickly. So I think gold still has quite a bit of run.
Yeah, you make a good point about financial stocks, for example, selling off worse than the headline-grabbing tech names. Do you see gold's strength as a deeper warning about the underlying financial system stress?
Yeah, I think over the last few years, the trust in the financial system has been falling pretty quickly, thanks to the rise of crypto, thanks to the bank failures, the financial crisis, all these sorts of issues, the inflation. Someone I know in the UK has launched a bank account that is denominated in gold, but still gives you the debit card and all the conveniences of a day-to-day bank account, debit card. And people who have used that, who have had their day-to-day savings or month-to-month savings, have benefited enormously from this. So all these sorts of innovations are happening. They're causing people to question the financial system, and gold's an obvious place to end up if you're going to do that. So there's this sort of awakening where we had the great moderation period where everything was very stable, or appeared to be. And that ended up in the financial crisis, the European sovereign debt crisis, and then we had inflation. So the instability now is just constant. It's just rolling continuously. At some point, we're going to get a debt crisis in Europe and the US again as well. So the time is right for people to be invested and interested in gold.
Where did I read something about? I've read something today, and I'm not going to articulate this very well, but there was a significant change of policy in Germany too, being the strongest. I think it was they're basically printing money. I'm not sure how they put it, but surely that's another step into this sort of direction where it's going to be a good foundation for gold. You probably know what happened more than me.
Yeah, so I'm originally German, so I follow that German news quite closely. And the basic idea is that in order to get a coalition together to form government, they decided to abolish the debt brake, the constitutional restriction on how much Germany can borrow. And the idea is here that, Germany's very careful about its fiscal situation because of the whole Weimar inflation.
Whereas this is a marked change from that policy. It's weirdly 100 years ago where it stems from the inflation of 100 years ago, right? The Weimar Republic.
Yeah, it's an astonishing thing because it's a sort of a constitutional question as well. And so everything's very confusing now because the legal challenges to the euro and deficits and euro bonds, all these sorts of issues have been weakened by this. And ironically enough, of course, it's happened as a result of the fact that the German electorate lurched to the right towards AfD. So it's similar to what you had in the UK. Where a lurch towards reform ended up giving you Labour. So policy surged to the left, even though voters surged to the right, and so on and so forth. It's very familiar now. And so all of these trends continue to get worse. And yet that's another obvious way to feed into gold. And I think Germans are quite likely to be big gold buyers in coming years as they see what their government gets up to.
Yeah, it's just interesting to me because all these things like that we talked about, they're all kind of converging at the same time. But let's just bring it back to the stock market for a moment. So gold stocks, as you mentioned, they're holding up during this wider market rout. Like, what might that tell us about changing sentiment in the sector after years of underperformance? Because if we have conversations with our gold guy, Brian Chu, right? The gold explorers and developers, they've been massively lagging the past 2-3 years.
Yeah, that's right. I think it's even longer than that now. It was sort of made sense during the 2020 sort of post-pandemic boom, right? The supply chain crisis, inflation, all that sort of stuff meant the gold price was going up quite quickly, but business costs were too. The pandemic, the supply chain, the personnel, all these sorts of issues made costs of gold companies go up a lot as well. Whereas this time, we haven't got the same sorts of conditions. We've got the gold price rising very quickly again, but you don't have the same sort of story about costs going up at gold miners. And unfortunately, so far at least, what's happened is that the stock market, the wider stock market, has sold off very quickly, and gold stocks have sort of slightly trended up, which is unusual. Gold stocks usually do correlate to the broader market to some extent. So they have diverged, but they haven't gone up. Right. And so you've got, we call it the alligator's jaws. You've got this opening between the gold price going up and gold stocks not going up very much yet. And the argument is that this becomes a fundamental analysis valuation story where these companies are going to be extremely profitable over the next 5-10 years because of the surging gold price. But the share price haven't gone up yet. So it's a great investment opportunity and story that is still sitting there on the table for you to take advantage of, whereas the wider stock market is in trouble.
So just to finish off, Nick, so you work with Jim Rickards, you look after the recommendations of that letter for Australian investors. Are you going to be shifting any focus to the gold, or do you have any things like that in your portfolio at the moment?
We already have a lot of focus on gold. I recently added some more. I'm sort of wary of stepping too much on the toes as some of our colleagues are really focused on the gold stuff. So I've taken a sort of very basic view of adding some gold stocks without getting too deep into the mining specifics there. The interesting part for me right now is that the Australian dollar is very low. And this is the topic I cover in this week's article. The Australian dollar is very low right now. So if it rises, this undermines the value of gold for Australian investors. So if the gold price goes up 20%, in the next year, but the Australian dollar goes up 25%. You lose money. And there is a way of hedging this out. There is an ETF that hedges out this currency risk. So what I'm thinking about doing is transferring our focus from gold without the currency hedge to an ETF that does have the currency hedge. So that if the gold price continues to rise, but the Australian dollar rises too, we still collect the profit on the gold price rising. We're not undermined by that exchange rate move. Some Aussie gold stocks would be affected more than others by this exchange rate issue. Maybe I need to interview Brian or James about which stocks have projects where, based on how this might impact their stock valuations.
That's a very good idea. We'll leave it there. We'll also bring up a report which is all about gold. Actually, it's actually from Brian, who covers gold, the gold market in the Australian Gold Report. We'll provide a link. Do check it out. There's a number of different ideas there that I think might interest you if you are looking for gold stock ideas. I think it's a pretty good research place to start. So thanks, Nick, mate. Maybe we'll discuss your piece that's going out this weekend next week. What do you think?
Yeah, well, we just did a little bit of this week's one there at the end. Maybe I'll come up with something even more interesting next week.
All right, lovely. Take care, mate. Have a good weekend. Thank you.
Thanks, Woody.